Hi, welcome back to another video. As many dividend investors know, when picking up dividend stocks, the focus should not just be on the yield of a stock today, but also potential for future dividend growth. That's why my portfolio is dominated by dividend aristocrats and dividend kings. Large, well-established companies that have been paying dividends for decades and have proven their ability to continue increasing dividend payments. Now, one key way to determine a company's dividend growth and sustainability is to look at its payout ratio. A payout ratio is simply the percentage of a company's net income or profits that it pays out as dividends to its shareholders. Generally, a low payout ratio is preferred because it indicates a company still has room to keep on growing its dividends and possibly by a large amount. A low payout ratio may also mean a company is holding back part of its net profit or net income to reinvest in the company for growth. Now, while there is no hard and fast rule of what constitutes a good payout ratio, a general rule of thumb is that a payout ratio of 60% or lower is a great rate. So in this video, I'll share with you 6 dividend increases that I am receiving on my stocks in 2025. This is by no means an exhaustive list. I'm just trying to manage the length of this video. Now, for completion, in total, I currently have 22 stocks in my portfolio across 3 different accounts. 2 accounts are tax-sheltered accounts, and 1 account is a taxable account, a margin account. Of the 22 stocks, 5 are ETFs and 2 are non-dividend paying. And so here we go. Let's look at the stocks. So to the first stock. The first stock is Johnson & Johnson, ticker symbol JNJ. JNJ is a company in the healthcare sector. It is a popular dividend stock among dividend investors. On April the 15th, JNJ announced a dividend increase of 4.8%, its 63rd consecutive dividend increase, raising its quarterly dividend payments from $1.24 to $1.30 per quarter, effective June the 10th. This increases JNJ's annual dividends per share from $4.96 to $5.20 per share annually. JNJ, of course, is a dividend king. It was founded in 1886. It's been around forever. Now, while I have a number of stocks that pay a high yield, JNJ has a decent yield of 3.31%. At the time of this recording, the stock is trading at $157.14. A good recovery from its 52-week low of $140. JNJ, of course, is a large cap stock with a market capitalization of nearly $380 billion. The stock has a good payout ratio of 55%, which gives it plenty of room to keep on growing its dividends for many, many years. I only have a small position in JNJ. I only have 20 shares. I started this position in 2024. So the 4.8% increase in dividends will increase my overall dividend income by $4.80 going forward until the next increase. The second stock is the Royal Bank of Canada, ticker symbol RY. Of course, this is in the financial services sector. On May the 29th, RBC declared a dividend of $1.54 payable quarterly from August. So this is yet to come. That's an increase of 4% over the current dividend payments. That increases its annual dividend payments to $6.16 per share, up from $5.92 per share. The Royal Bank of Canada, RBC, is Canada's largest company by market cap and one of the leading top 10 banks globally. It operates in 29 different countries and it continues to grow in the US. It is a dividend aristocrat, one of Canada's Big 5, or 6 if you count the National Bank of Canada. The Big 5 are a group of 5 of Canada's largest banks that dominate the sector and are key players in the Canadian economy. They include RBC, that's the Royal Bank of Canada, TD Bank, Bank of Montreal, Scotiabank, and CIBC, Canadian Imperial Bank of Commerce. RBC has a great payout ratio of 46.18%, which is fairly low and is exactly what most investors would like to see, because this indicates the company has plenty of room to continue growing its dividends and potentially by double digits if it wanted to. Now, based on my current holdings of RBC, I have 192 shares across 2 different accounts. My annual dividend income will increase by $46.08 as a result of this dividend increase. Now, if you enjoyed content like this, please consider liking this video and subscribing to my channel. It helps the channel grow, it's free, and it encourages me to continue making these videos. Let's look at the next stock. The next stock is Bank of Montreal, ticker symbol BMO. This is also in the financial services sector. BMO recently declared and increased its quarterly dividends to $1.63 effective August this year. That's up from $1.59 per quarter. That's an increase of just over 2.5%. That brings the annual dividend payment to $6.52 per share. BMO is also a dividend aristocrat and one of Canada's Big Five. It's a large cap stock with over $100 billion in market capitalization. It was founded in 1817, making it Canada's oldest bank. It trades both on the TSX, the Toronto Stock Exchange, and the NYSE, the New York Stock Exchange, under the ticker BMO. The stock has returned over 32% over the last year, and it has a nice yield of nearly 4.5%. BMO also has a nice payout ratio of 58.31%, which gives it plenty of room to continue growing its dividends. Now, based on my holdings in BMO, I have 150 shares. I'll see an annual dividend increase of about $24 as a result of this dividend increase. The next company is Enbridge, ticker symbol ENB. Enbridge is a company in the energy sector. In February, it raised its dividends from 0.943, so about 94 cents per quarter, up from 0.915, about 92 cents, an increase of about 3%. Enbridge is a dividend aristocrat, and it's also a favorite among many dividend investors. With a yield of 5.95%, it offers a steady cash flow to investors who are looking for income in the market, and so I will continue to build on this position. It's an energy infrastructure company with major pipelines for liquids and gases in both Canada and the US. Because it operates in a regulated industry, it's a great defensive stock with a reliable and growing dividend. And it operates the largest natural gas utility in North America with nearly 7 million customers. It has a high payout ratio of over 136%. However, this is an improvement from about 3 months ago, March, when it had a payout ratio of 156%. Now, while a payout ratio of 100% or greater is a risk, I'm still comfortable investing in Enbridge because I know that it generally has great financials. For example, its financials ending in March, its revenues were up 65%, and so was its net income, which was up over 55% at about $2.36 billion. That's why it's paramount that you do your research into any stock before you invest in it. The other reason I'm not concerned about Enbridge's high payout ratio is that I know it has a number of long-term contracts with governments both in Canada and the US, and so those long-term contracts that run for decades in the future will continue to provide a good revenue stream so that it will continue to pay a steady dividend income. Now, I currently have 249 shares of Enbridge, so based on this dividend increase, I expect to see my annual dividend income increase by about $28 annually. Stock number 5 is Coca-Cola, ticker symbol KO. Coca-Cola, of course, is in the consumer staples sector. In February, the board of Coca-Cola declared a dividend increase of about 5.2%, increasing quarterly dividend payments from 0.485 to 51 cents per quarter effective April 1st. Like JNJ, Coca-Cola is a dividend king, having increased its dividends for over 50 consecutive years. In fact, Coca-Cola has increased its dividends for 63 years without interruption. Coca-Cola is the world's largest beverage maker, with more than 2.2 billion servings of its beverages consumed every day across 200 countries and territories. It's a mature company with a large market cap of more than 300 billion at the time of this recording, and it's up about 15% year to date. It's currently trading at about $70 per share and has a rather unattractive yield of 2.89%. However, it's been a dependable dividend stock for decades. It also has a payout ratio that is starting to get a bit high at about 79%. I currently have 50 shares of Coca-Cola, and so that will increase my annual dividend income by $5. Last but not least, stock number 6 is ABBV, ticker symbol ABBV. ABBV is a company in the healthcare sector. It's a drug manufacturer. ABBV increased its dividends by 5.8% effective February of this year, February 2025, increasing its quarterly cash payments from $1.55 to $1.64 per share. That's equivalent to $6.56 per share annually. ABBV is a pharmaceutical and biotech company and is well known for the manufacture of autoimmune and cancer drugs like Humira, Skyrizi, and Rinvoq. It is another blue chip stock in my portfolio and a large cap stock at that, with a market capitalization of over $325 billion. At the time of this video, it's trading at about $185. That's materially below its 52-week high of nearly $219. So now might be a good time to buy if you're looking to start a position. I suppose if you're looking to invest for the long term, the price today really won't matter 5 years from now if you're a long-term investor. It has a decent yield of 3.44%. However, it has a really high payout ratio of nearly 270%, which would be considered risky. So again, this is one of those situations where you have to do your research before you invest in a stock like this. I only have 30 shares of ABBV at this point, so the increase from $1.55 per quarter to $1.64 will increase my annual dividend income by $10.80. And so that will increase my overall annual dividend income from this position from $186 per year to $196.80. So those apparently small dividend increases will increase my annual dividend income by more than $118 annually going forward. Again, Johnson & Johnson increases my annual dividend income by $4.80, the Royal Bank of Canada, $46.08, Bank of Montreal, $24, Enbridge, $27.39, Coca-Cola, $5, and ABBV, $10.80, for a grand total of $118.07. So those were the 6 dividend increases for 2025 that I wanted to share today. I know there'll be others forthcoming, and I'll share those in a future video. I hope you enjoyed the video and found it helpful. If you did, please consider liking and subscribing, share with family and friends. I'll see you in the next one.